we should not try to second guess or preempt and say, oh, these folks can't afford it. This bank can't afford it. Or this company, because they are the size they are, we're going to jack up our list price so that we could discount it down. Just lead with it. If you believe that it's of value and you believe that you're fairly priced, then great, lead with that.
Are you a scaling SaaS founder? Ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those who don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel podcast, where fintech growth means turning legacy systems into launch pads and making every transaction smarter, simpler, and ready to scale up. I'm your host, Jeff Maines. I help B2B SaaS founders like you grow from traction to scale. Here, growth is more than just numbers. It's about crafting a future-proof company, premium valuation, and leaders who build a business of significance while living epic, adventurous lives. What's harder than building a fintech? How about convincing a bank to buy it? In this episode, we break down what it really takes to sell into one of the most risk-averse, regulation-heavy sectors out there. Spoiler, your shiny features aren't enough to do that. Success in this space isn't about moving fast and breaking things, just the opposite. It's about earning trust, reading the room, and understanding who actually makes the decision. Hence, it's never just one person. We dig into the reality of long sales cycles, how to navigate complex stakeholder maps, and why your pitch should make the banker feel like a champion of change, not like a risk taker with something to lose. You'll also learn how to preempt objections, address compliance concerns with confidence, and use smart tech to spot the subtle signals that show a prospect is ready to move or maybe they're not. If you're in fintech or selling into the financial world and tired of hearing not right now, this episode gives you the strategies, language, and approach you need to move the needle. Let's dive into it. Our founder last Tuesday was Rahul, Pangam, founder of Rapid Canvas and former PayPal exec. He showed us how to democratize AI without overwhelming your organization. From his days scaling fraud solutions for 30,000 plus merchants to today's mission of bringing AI to non-technical teams, which I think is awesome, Rahul laid out what it really takes to deliver data products that drive action, not confusion. It's for them, it's all about outcomes, which is amazing. You got to check them out. And our expert guest last week, Patricia Fripp, the legendary speech coach behind some of the world's top executives and sales teams, revealed the secret sauce to compelling communications. Whether you're on stage, on Zoom, in the boardroom, her frameworks help you turn your message into a moment your audience won't forget. If you missed either of those episodes, go back and check them out. There's so much gold to be mined from those. I've actually listened to them several times myself. My guest today is Stacy Bishop, founder of Selling FinTech. Stacy coaches startups on how to win over risk-averse buyers, navigate complex sales cycles, and turn cautious bankers into champions of their own organizations. In this episode, she breaks down the biggest mistakes she sees fintech founders make and how to fix them. From stakeholder mapping to narrative alignment, Stacy lays out the smarter way to go to market, one that meets banks where they are, earns their trust, and gets to yes way faster in a really slow sales cycle environment normally. Well, she explains how to position your company as a partner, not just a product, how to deal with internal blockers before they emerge, and how to use every stage of your sales process to reduce perceived risk. If you're selling in a banking, health tech, fintech, financial services, any regulated space, this conversation is just for you. Welcome, Stacy Bishop. Hey, Stacy, welcome to SaaS Fuel.
Thanks so much for having me, Jeff.
Well, you've been at the intersection of fintech and banking for a while, a number of years. What inspired you to focus on helping fintech founders get better at enterprise selling? Because we need it.
I mean, I will tell you what, we all need a little bit of help, especially when it comes to selling to bankers. And as far as what inspired me, I think a couple of things. I happen to be married to a banker myself. FinTech founders often sell to bankers. My husband happens to be what's called a BaaS banker, where he sells also to FinTechs. And as the spouse of a banker selling to fintechs that happens to have grown up in this fintech space and sales space, I would find myself at lunches and dinners with these fintech founders who inevitably would turn to me and ask for suggestions. Like, how do you know who to reach out to in a bank? How do you get their attention? How do you create urgency?
Yeah.
And it just so happened that these were conversations I found extremely helpful and meaningful. And I was exiting my prior company, and I thought, you know what, I'm gonna see if I can help and be of service to this group. So that's a little bit about that's the movie trailer version of how I'm here and how I got here.
That's awesome. Well, I think that's a question that we all ask. Like, how do we get into the right people? How do we ask the right questions? What's maybe one of the things that founders underestimate the most about selling into the banking vertical?
Ooh, how quickly they can do it. Because
Yes.
I will just tell you, and I think we see this across the board when it comes to SaaS as a whole, but specifically in SaaS related fintech being sold to banks, we have the age old, I'll call it a dilemma, if you will, for fintechs and SaaS companies where they're used to being very agile, very nimble. They iterate quite quickly and frequently, always pushing out new code. They're used to operating in hyperspeed because they need to get to revenue quickly. They have investors also interested in getting them to revenue quickly.
Right.
And in this space, this very fast moving, intelligent group of people are trying to sell to a historically conservative and slower moving customer base or prospect base.
Yeah.
And it's not that bankers are not intelligent or that they don't want to do the cool things or that they don't see the value in the technology, but they do traditionally move at a slower pace. And a lot of that has to do with the regulatory environment. I'm sure they would love to move quicker, but
Yeah.
they have all of these considerations they have to make. It's a very regulated space. And traditionally, bank boards are also a bit more conservative. So it has been so interesting, Jeff, to see these two groups try to work together. And in many cases, they're just banging heads. They're operating on different timetables. And we see a lot of sales cycles just push out, push out, push out in a fintech
Yeah.
space. I'm sure you've seen that in your own space and your own expertise as well.
Oh, absolutely. And I love that, just that the analogy, the butting heads, because I see that all the time. And fintech wants to move fast, and bankers, they move at the speed they move.
That's
And a
right.
lot of it is, regulatory, very risk averse. Founders will lead with features, and banking is much more relationship driven. And so it's really interesting just seeing that dynamic, and you're trying to fit these two things together. And there's a match a lot of times, but it's just figuring out how to make that happen is a bit of a mystery.
Oh my goodness. You nailed it. You were speaking to my heart when you said that these founders often just also speak about features. They do speak about features and functions, and I get it. They have this product that they are so proud of, that they have
Yes.
their own resources, be it time and money to develop. And I would be proud too. But trying to translate that into solving a need for a banker and trying to have the banker understand and respect it with the same level of value is often very tricky. So leading with features may not be the best approach when it comes to selling to bankers. Always lead with benefits and future vision, future state. That's a good little takeaway.
Yeah. And what about just that risk aversion? What is it that they need to really do to inspire trust in that regulated environment?
Yeah, I have a couple of ideas on this that I often share. I'd love to hear if these just jive with what you would recommend. But I think first and foremost, fintechs are often in a rush to get to market with an MVP. And
Right.
sometimes that means that they go to market without compliance related audits or certifications like a SOC 2 Type 2 report,
Right.
which for many bankers, it's a no go. So I
Right.
would just caution any fintech to always give ample note to the fact that they're going to be asked for something like a SOC 2 Type 2, and either be well on your path to getting it or show that you're in process and you expect that final written report on this date, and you can even build in an agreement contingency based upon that. It doesn't have to kill business, doesn't even have to slow business, but you have to plan for business. So that's one thing I would say when it comes to selling to bankers. The other thought that I had, at least initially, Jeff, I'd love to kind of see where you land on this. It's just when you're selling, when you are in the actual conversations, you should never shy away from the fact of saying, normally, when I'm speaking to bankers like you, a common question I get is about compliance and whether we have our SOC 2 Type 2. And I'd love to tell you that at this stage, we're in the final home stretch. We expect that to be granted to us on this date and that time. And then another thing I also get is this question. So, what I'm trying to state, and maybe I haven't had enough caffeine this afternoon to state it clearly, is that you can anticipate what those types of regulatory or compliance related pushbacks are going to be. If
Always. Yes.
you always, and if this is your first handful, reach out to me and I will let you know what they will be. You want that answer, preempt them. You show up like a professional and you disarm some of those concerns, or you're de-risking that situation and you're allowing the conversation to proceed. How
Right.
does that strike you? Do you have any things that you have done in your past that have worked well in this
I
regard?
love that you said de-risk, and I think that that's really key because bringing that up, one, you're not shying away from it. You're not trying to hide it. Another
Right.
one would be if you're a young company, you haven't been around a long time. The old thing, no, nobody ever got fired for choosing IBM. IBM even said that. So but it's you're really leaning into those things. Why do you want to use this? Well, here things in that that we're thinking about, or here are the things that we're normally asked. It lets them know that you've been there before. It lets you know that you're an insider. You're one of them. That you understand the industry. You're not just trying to sell something, but you're really taking time to understand what kind of concerns or questions they may have, and you can head those off earlier, and the sooner you can do that, either the deal moves forward or it dies. Either way is
It's a
a
win.
win. Yeah.
Yep. I
And
love that. Yep.
yeah, de-risk.
De-risk. It's all about the de-risk.
Yeah. So what about pricing?
Mhm.
Pricing integrity within the financial sector. Do they expect a lot of discounts? Should we go in and go high and then give them the best and final, or how should we think about pricing when we're selling to that market, particularly as fintech founders?
It is such a good question. I would say if you have go to market fit at that stage, you're doing great. And I would lead with list price. I once had a sales leader, and I love this phrase, but he said, we should give everyone the opportunity to pay list price, and he's not wrong. If we feel that our solution, our offering is of such value and others in the market are willing to pay it, that's what we should go in with. We should not try to second guess or preempt and say, oh, these folks can't afford it. This bank can't afford it. Or this company, because they are the size they are, we're going to jack up our list price so that we could discount it down. Just lead with it. If you believe that it's of value and you believe that you're fairly priced, then great, lead with that. Now, I will say that, of course, as sellers across all spaces, we are used to people pushing back on our price, either for sport, either because they can't swing that signing on their own. Perhaps they can't sell our solution internally. There's all sorts of factors that can come into play that we should be prepared to combat before we just slash a price. But here's what I'll say. I'm always prepared that we need to go in and we will need to be aggressive with our discounts. Like many other people in this space, if I'm going to give a discount, I'm going to expect something in return because this is
Yes.
this is a partnership and we should treat it as such. We're both professionals here. We're both embarking on a future state together. And to help you reach this future state, we have priced our solution fairly in order to help you meet it. If you need a discount, that's fine. But I would like to ask you to be a case study. I might pull other levers and ask you to have a longer term contract or pay monies up front. Depending upon the fintech that I might be working with, those levers are going to be different. And I'm sure you've had the same in your past as well, where depending
Yeah.
upon what you're going to market with, the levers are different, the asks are different, but they should always be there. And I'm not, just making these things up. These have been around the industry forever, but sometimes the sellers were hesitant to ask for those items, and we should never be.
Yeah. Yeah, absolutely. Yeah, anytime I hear the word list price, I know that it's a made up number and there's going to be some sort of a discounted price later. Is that something that should we change the terminology around that? Or do you think that that still works today?
Ooh, that's a great question. I had not even given that the thought that I probably should. Is there a different phrase that you favor beyond list price? Is it just our
Oh, I don't
price?
know. I just whenever I hear somebody say, "Here's the list price,"
List
I mean,
price.
I don't pay list price for anything. Most people
Right.
don't. So
And
I mean, when somebody says that, it's like, okay, cool. Then there's going to be a discount. But then if it gets to be too much, then I know that list price is completely made up. If they're going to discount 50% or maybe more, I mean, come on, really?
God, you're so dead on about this. And I think in most cases, list price is made up just like in some cases OTE when you're selling for a fintech
Well,
startup.
that's true
They can,
too.
they can tell you whatever that OTE is because it's a made up number. It is completely
Right.
projected and fictional until it happens. But I
Yeah.
think you're right. When you say list price, it almost just triggers in your mind that this is the starting price. That's exactly what that term means, and that we're going to go down. And I've been in many situations where I've worked for a company where one side of the business discounted 60% in some cases, which let's be
Wow.
honest, it's great if you have 60% margin in a deal. But at the same time, 60%, come on, that's not a real price at that point. It's
I think
it's
it's a
you're,
trust
you're just
problem.
repricing yourself. Go ahead.
Yeah. I think
Yeah.
it's a trust problem because if somebody tells me this is list price, this is what our value is, and then I'm going to give it to you 60% below that, no, that's not your value then.
Yeah. And
And
then
there's something wrong there.
what does that do for you at the time of renewal? Because in most cases, people are like, oh, you know what? We'll make it up whenever they renew
Right.
with us. That's when we'll right size it and we'll get list price. To which I always say, good luck. Because when
Right.
you have discounted by 60%, that is the expectation going forward from this point on with that
Correct.
relationship that you've established with that prospect is that you're willing to do this, you're going to do it for me again. Doesn't matter how big or small that prospect is, you've established that precedence.
Absolutely. And if they're going 60% off, my first thought is why not 70? I mean, how low can we go here?
Boom. Great question.
Yeah.
Great question. And I find how about you on this? But I've been in various sales cycles in my past to where that it never started at 60%. It always started perhaps 20%, 30%. We got deeper into the sales cycle. The longer the sales cycle became, the more people just wanted to get it done and over with. And you keep this negotiation going on, and you just chip away. And
Yeah.
then you get to
Yeah.
the 60%, and then you have, Jeff, you're sitting there going, I bet I can get 70%. And I think I've tended to the past 5+ years in my career like to negotiate more in one sitting, even for
Yes.
big enterprise deals. Have you been
Yes.
there? Because I've done that. Let's negotiate all along the way, and it's brutal. And
Right.
you cut deeper than you've ever expected.
Yeah.
But I think that there are players in the space that I have learned from that have suggested to say, we're going to do this one time. And a key phrase that I've learned is, and what else? What else? They're going to ask
Right.
you for something. Okay. And what else? Now, I can't make any guarantees now, but and what else? What else? What
Right.
other
Right. Get it
concerns?
all out on the table.
Let's get it all out there and I can create the best price for you. And then when we get to the end of that discussion, okay, well, I'm going to need to take this back and either make some decisions myself or speak to others within my company, the CEO. From your side, can you guarantee that if I get what you're asking or somewhere near it, can you make the deal happen from your side? I love asking those types of questions as
Yeah.
well so that I'm not coming back and saying, whew, got it. I was able to get everything you've asked for or nearly everything. And them to say, well, bad news. I wasn't able to get this approved by the board or by the
Right.
CEO.
Right.
We're gonna have to go a little bit lower. You just continue to negotiate against yourself.
Right.
So I'll step down from my soapbox, Jeff. But those are where I have the scars that we've all learned from.
Yeah.
That you're like, wish I would have known that about 10 years ago, 20 years ago.
Well, I like your approach because negotiation doesn't have to be adversarial.
No.
It can really be collaborative and a win-win because ultimately it has to be. If it doesn't matter if you're the buyer or the seller, everybody has to win in the deal. Because if
Yes.
you're buying something, you don't want to buy something from somebody and squeeze them so hard they have no margin and
Right.
can't support you and disappear. And
Right.
on the other side, you don't want to go so low that you really regret taking the business.
Right. Oh, gosh. Yes. Yeah, everyone does need to feel like they win. I agree. And I think I've been through those stages of my life personally with things such as car purchases where I love to win. It was almost a sport, negotiations.
Yes.
And I think I've learned being a professional salesperson that that's not a great situation, like you said, for either. When both people feel like they win, you have a true partnership and you are invested in the success of the other person. You're not sitting there thinking, ugh, what do they want now?
Right.
Why are they calling now? Oh my gosh, can't they just figure this out? We don't have the people to support them. We went so low on our price, just like you
Right.
said.
Right.
But yeah.
Yeah. Well, you teach founders to make buyers the hero. Tell me more about what that means and how does it change the dynamic in a deal?
Yeah. And I obviously didn't originate this thought process either, but it's one that I have internalized. And it's just this concept of as sellers, we are coming in to help people solve problems. And when we're doing that, we shouldn't be approaching it from the viewpoint of my code, my solution, my offering, my service is so beautiful and so effective that we are going to help and we're going to slash these inefficiencies and we're going to promote all of this new business. No, no, no. Instead, it is we are working together so that you can better serve, in my example, in the space I play, your end user, your depositors, your customers, or your members, and position yourselves as that trusted financial advisor. We're along for the ride, we're your superhero sidekick, but at the end of the day, you are the one that should be applauded for recognizing that there's a problem to begin with, going out
Hmm.
and searching for solutions, defining what the future state is so that you can be the best financial institution for those that you serve. And we are thrilled to empower you to do that. So it's not it's a subtle shift in the approach, and it's not like we're trying to draw it out or call it out and saying, no, 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 it's really you. You're the hero here. It's subtle. It's very much in our words. It's very much in our positioning. We make everything about who these people are trying to serve, these bankers, whether it's internal or external, and showcase to them how their decisions today are going to set them up for the future tomorrow. And we play this background role. So that is my approach to it. It's served me well. I've seen it serve others well as also. Interested. You probably do this even subconsciously. Has that ever been an approach you've tried, or when you
Yes,
think
yes,
about it?
absolutely.
Yeah,
And it probably started out more subconscious, and then really
exactly.
realizing it worked, and you really make it conscious. And so look for places to help somebody else shine
Yes.
and help them be the hero, help them win. What is it? And just really understanding their role. What is it that they need in their role in their job with their boss, their peers, their board, whatever it is. What would make them look really good in this environment, in this
Oh
situation, and
my
figure
gosh.
out how to deliver something like that.
So true. And it doesn't have to be as manufactured as one might think if they're from outside of
Right,
sales, because
right,
these people, they are intelligent. They are people that have recognized that there's a problem, and they do deserve to be applauded. You're just setting them up for that success. And listen, it's in everyone's best interest for them to have a minimized reputation risk from making a decision that includes us,
right,
and for us to de-risk a decision when it's to lead towards a solution that could include us. Even if it's not us, we should help empower them to make the best decision for their financial institution, for their bank. But you and I both know this. Man, I'm not getting paid by the word here, folks. So I don't know why I'm just droning on about this, but I think we've all just understood that one of the biggest risks to our deal is a reputation risk. People don't want to put their careers on the line if it's making a big decision, something that will cost a lot of money. If it doesn't pan out, that is their career that's on the line. So
right.
it's easier for them to make no decision. How much better is the conversation when you come into it understanding that their reputation and career is on the line, and you can help make sure that their career and their reputation is solidly supported with this decision and amplified because of the decision, and be part of that mission. So
Yeah.
I digress. I digress.
Yeah. Oh, I think when you can do that, you can win deals that you might not have otherwise, or certainly go a lot further, and probably makes negotiation easier as well.
So
All
true.
things being equal, features of the same. Who is the person going to go with? The one that they have the most confidence in, and not only that can deliver the solution, but just the personal risk as well. So it's not just business risk. There's personal risk in these deals too.
Absolutely.
What if a leadership book and a Netflix drama had a baby? That is The Captain's Keys, Storms, Emotional Wreckage, and a surprisingly practical leadership system that one CEO called the owner's manual and never got for 20 years of leadership. Here is the brutal truth. You're probably drowning in LinkedIn connections while starving for real relationships. I hear it all the time. Most leaders are exhausted from playing the lone hero, and it's killing both your results and your sanity. The Captain's Keys reveals a new leadership framework, the stability matrix, four specific relationships that prevent burnout while multiplying your impact. And this isn't just theory. It's a system that I've used to scale companies and taught over 1,000 executive leaders. So grab your copy today at thecaptainskeys.com, Amazon, or choose your own adventure, print, ebook, or audio. Stop drowning alone and build your stability matrix. Well, what is your go-to framework or structure for a repeatable fintech sales motion? We typically have a sales process, but the
Yeah.
buyer journey is not linear like that.
It is not. If we're going to talk in terms of the sales process itself, I wonder if I have one just handy around here for a company that I work for. I'm sure I do. That's just not handy, but I like to map out things in terms of again, sales process wise, starting with the introductory phase. And I don't like to make that an intro and demo. If this is what you're asking, Jeff, feel free to redirect
Yes.
me. But
Yes.
I think an intro or discovery call is simply that, a time for you to get to know these individuals, for you to understand what their goals are, what they're both personal, if they're willing to share at this stage. Don't be concerned if they're not willing to share with you their career
Sure.
concerns or risks. That may come later, but what is the institution shooting for? And don't ever go into a conversation, or I've learned not to, where I think I can help someone. I should go into the conversation thinking, okay, here's what I'm hearing. Here's what they're telling me. Can I help them? If at the end of this call, they feel like that they need some help and I think I can help them, then we'll move on to the second stage. And that is commonly the demonstration stage. And in that, it's everything that we have always been trained in sales and everything that up and coming sellers are hearing. And that is personalize that demonstration. And I implore you, do not just feature dump on these people.
Yeah.
Instead, pick out the use cases, pick out the things they're solving for, and show how you solve for those with your solution. Then maybe you can get into other features that your company has spent all this time and effort developing, but start with their needs. A demonstration and every conversation in a sales cycle is never about the seller or the fintech, always about that prospect and the banker. And I don't know about you, but I also like to have some internal alignment calls well before we get into proposal stages, even actual due diligence conversations, negotiations, things like that. But every opportunity that we are in front of a prospect, we should be broadening the audience. We should be touching more people. We should be
Yeah.
building our network and inviting more people to the party, or sharing more information with a broader range of people, even if they're not in the room. Which I would tell you, Jeff, that I think that's also a great opportunity to make your champion look like a hero. When you send a message to someone that's not in the room and you say, yeah, I happen to be working with Jeff, who is fantastic. I'm extremely impressed with his acumen in your business and his vision for what he thinks Bank XYZ could be if we were able to fill in the blank, whatever your solution does. You can compliment these people, make them look like heroes while you're still interacting and multi-threading with others in the world. So at least if that was your question, I think you're right. It's not linear. Sometimes you hop
Yeah.
backwards to go forwards. My suggestion is whatever your process looks like, use each stage as an opportunity to bring in more people to the conversation and also to share value. Share takeaways, share looms, get yourself
Love
in
it.
front of these people.
Love it. Well, buying committees is something you mentioned before, and
Yes.
a lot of the decisions are not made by just individuals. It's a complex sale. So, how do
Right.
founders identify champions inside the bank who can move the deal forward, and also either let them know or help protect against internal blockers?
Oh, I love this question. Some of it is just you need to have some technology that helps you understand who the buyers are. For example, a company that I'm working with right now, we are mapping out at present who the actual buying committee roles are. So not for each FI, but if we're going to pitch this solution across a variety of different FIs, who are the titles we normally speak to? CFO, CRO, COO, Chief Marketing Officer, Chief Digital Officer. Fill in and know what those roles are. And just as
Hmm.
importantly, we need to develop messaging around each of those roles so that we would know, hey, when we are speaking to a CDO versus a CFO, what are the points, the talking points that we should hit on in each scenario? Because that will inform a lot of your discussion and conversation inside a room. But once you have the titles mapped, or the roles rather, titles and roles, and the messaging, Then you can use a variety of tools, whether it's LinkedIn Sales Nav, whether it is an enrichment tool like Apollo or ZoomInfo or others that go
Mm,
out for an
that's good.
account and help you fill in those committee members. The biggest part after that is then I would say, well, twofold. Asking for those people or suggesting that those people be involved in the next stage. And that can sound something like, seems like there's enough of a fit here for us to continue the discussion. Would you agree? Well, if so, the next stage is the demonstration stage where we're going to touch on these key components. And we often see the CFO pulled in because of this reason. We often, invite the chief digital officer because they are the ones that are going to implement this into your digital banking and mobile banking platforms, et cetera, et cetera. So you can guide the discussion, because my concern is, as sellers, if we don't, you'll likely not get that expanded audience. But if it first starts with knowing who in the heck you want in the room, you need to have them all mapped out before you go into the discussion to the degree that you can. And then you can also, if you have any questions, ask questions, because
Mm.
people love to correct sellers. So, Jeff, that can be like, well, I think
Yeah.
is Sally still the CFO, and is this her email address? No, 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 no. It's not Sally. It's actually Jeff, and you're way off on his email address. And there's ways in which you can be grateful and thankful, and then know that you got some additional information from these people. So I think it just you have to begin with some prep work, use some tooling, even if you have to go old school, do traditional LinkedIn searching. You can educate yourself before you step into those discussions. Last thing I'll mention about this, Jeff, and I'm so sorry, I'm answering you very broadly for a very direct question,
No
but
worries.
I learned this tip about 10 years ago, for and maybe 15, for each of these roles and each of these people. Also track what their attitude is towards change, whether they feel like there's a problem or not, and whether their view on change is a positive one or a negative one, their sense of
Mm.
urgency. So if they feel like there's a problem, but it's not pressing enough to solve right now, you're going to have your work cut out for you if that's the actual economic buyer in the deal. So map it all out, keep track of it, pressure test those players, pressure test their attitudes towards urgency and the status quo. I will
Oh,
be
that's
quiet
so
for a
good.
moment.
Because not everybody in the bank moves slow, and there are people who can probably make things move faster. And
Yeah.
so, having those and really understanding that, and I love that, just mapping them and understanding the individuals, I
Mhm.
think is key. But I mean, the sales cycles can be long. Yeah, 6 months, 12 months, 18 months.
For sure.
How do you help founders design something that is repeatable go-to-market motion in a slow-moving market? Because it just takes a while to get the results. So,
Yep.
how have you done that?
I think for me and for the individuals that I have worked with thus far and the companies I have worked with, it's truly about providing value at each stage and also recommending what the process looks like. One of the biggest mistakes I see fintech founders make, but also large companies, including a large logo that I've worked for in my past, make, is that you let the banker guide the discussion and guide the tempo of the conversation. So that can be something where you end a call. It can sound like, well, I assume you're going to want some time to look over or talk about this internally. Why don't you give us a call back and let us know if you're interested? Or we'll touch base with you and see what everyone's attitudes are. Instead of that, it's not, those responses are not horrible. Don't get me wrong, but it can be so much improved if you are providing them with some sort of a graphic of the buying journey and saying, we are here. The next step in the discussion is that we would take you to a demo and we would invite these players. The point of the demo, we're going to talk about these specific use cases. And we like to do the demos within a week and a half to 2 weeks of this call. If we're dealing
I
with
like that.
vacations this summer, we like it, definitely by 3 weeks so that we can just stay in tune with each other. Do you anticipate any problems with that? Asking those kinds of questions, seeing the responses back, lets you understand how in it they are, but guide the discussion. Tell them what good looks like, show them the process,
Mm,
and be consultative in saying, we like to do this within this time period for this reason, because ultimately we're working towards helping you implement a solution by this date that you told us was important. You
right.
gave us this date, so we want to work backwards from there. That's been my approach. That I have I've always coached people around. I say always. When I knew better to do it, always coached my teams and founders I've worked with in that regard, because my concern is when you don't do that, Jeff, that you have these bankers that are busy. They're wearing three other hats and they don't buy your technology every day. You sell your technology every day. You're the expert. So step into that expert role and guide them in what that process could look like.
Oh, that's so good. So good. Well, what's maybe one piece of advice you could give to a fintech founder that's pitching a bank this quarter and they want to close a deal? What would that be?
If it's this quarter and they want to close the deal this quarter, be sure that you have thought through every possible risk, every possible no, planned for those in advance, and that you
Mm,
have commitment from that banker that they also want to take care of this deal this quarter. And the latter is just as important as the former in what I've mentioned. Yes, you have to think through all of the reasons people will say no, plan, prepare for those, preempt those with some of the discussions we talked about earlier. But just because a founder wants to sell something this quarter doesn't mean the bank wants to buy something this quarter.
yeah.
If the banker is on board and says, "Yeah, we can make this decision by June 30th. We have to get rid of some budget by then." Great. Give them all the reasons and all the ammunition and guide them through the process to do that, and show them why we have to make this decision by June 30th in order to make that create that urgency for them. Otherwise, if that banker has not bought into that decision by June 30th, you are either going to slash your prices and discount heavily to get a deal and look less professional than you might hope, or you're going to kick that deal out to the next quarter, maybe even the next quarter. That would just be indicative that you were not on the same page as your buyer in that case.
That makes a lot of sense. I like that. And this quarter it is maybe possible, and it
Maybe
may not.
possible.
Yeah,
It
but
may.
it may be possible. You don't know until you really test the waters. I think this is a really good way to do that. I think it's very friendly. So it's
Yeah.
not pushy. It's not trying to get the deal done. But we all want deals done by the end of the month, end of
Of course.
quarter. We want to make the revenue numbers. I want to say that we've signed new business, but yeah, I like that where it's very friendly, and I think that's been your approach the entire time. And
Yeah.
talking here is you're really working with someone. It's not pushing a product on someone. So it's a very different from the traditional selling methods in a very traditional industry.
It is, and I've always approached things in that fashion, Jeff. I know everyone has their own journey into sales, but sales for somebody coming into it can be intimidating because I think people
Sure.
often feel that they have to be overly persuasive, or they have to be a Wolf of Wall Street type, or fill in the blank kind of sales personality we see portrayed on movies. And the fact of the matter is, if you approach selling as helping people buy a solution to a problem they have, even if it's not your product, it's a much lighter approach. It is friendly. And at the end of the day, if two solutions are equal, these people are going to buy from who they trust, who they feel like is going to solve their problem and not put their reputation at risk. as well as a person that they like, a person that is friendly and a person that shows up with integrity.
Oh, really good. Well, what is one tactical change that a founder can make, let's say this week, to improve their sales conversions or close rate over the next quarter or two?
Yeah, I would say a tactical thing you can probably do. Man, there are things swimming around in my mind right now. I guess the one I'll pick out is just make sure that at each stage that you have something of value to provide, and that you provide it. You follow up. So that can be following this intro column before the demo. I'm going to provide to you this. Perhaps it's a case study, perhaps it's a referral, perhaps it's, whatever content you have or you feel comfortable developing, something like that. And I think that can also be a reminder before that next scheduled event of the work that you have done in anticipation of this event. Because like nobody likes to be ghosted. Nobody likes to be stood up, especially if you're trying to drive business in the top of the funnel stages, moving business to mid funnel. We have to keep things progressing. And oftentimes it's easiest to cancel out of meetings in the intro,
Yeah.
disco, demo phases. So I always like the approach where we share with them before that call our excitement about our upcoming meeting and things that you've prepared that you're going to talk with them about are these things right here. Because when you do work, it not only makes you a professional in your own right, being coming to this call prepared, it also lets them know, oh, crap, they've done some pre-work. I would feel like a real jerk
Yeah.
not showing up when they have done the work for this conversation. It doesn't always work perfectly, but
Yeah.
if there is a conflict, they know you've done pre-work, they'll often reschedule and then show up the next time versus eh, we had an interesting call, could be a fit, I'm really not into it, I'll just cancel out or ghost them. So those are two tactical things. Always provide something of value at each interaction, each stage, and even use different channels, LinkedIn, email, drop information along the way, and let people know what pre-work you have done in order to let yourself show up as a professional.
Oh, really good. Well, what does the future of fintech sales look like, or fintech in general? I mean, will slow sales cycles always be the norm, or are we seeing momentum shift in the buyer dynamic? I mean, how is AI playing into this? What does the future look like?
Oh, it's exciting in fintech sales. There was a stat within the past year that said fintech is about 3% done. It is a burgeoning space out here, which is super exciting for all these fintechs that are spinning up each day inside the US. We see them coming internationally as well into the US banking market. So it's exciting for those players. But for bankers, prepared to be overwhelmed. There is a lot coming at you, a lot of people that are going to be doing the same things, and you're going to need to find your way through that. Most tools these days have some level of AI component. It's almost ubiquitous, the term at this stage.
Yep.
But I do think we're going to be able to see tooling around what we refer to as the reg tech space and the compliance and the vendor management space in banking that help make vendor decisions more easily. They test for the vendor management due diligence packet or vendor management packet. I think we will likely see the speed of these decisions now only be slowed down by how often the necessary committees meet, tech committees
Mm,
or board
yeah.
meetings. It won't be because somebody has to plow through a SOC 2 type 2 audit or financials. There will be AI to use that. It'll just be more of a scheduling type of delay. It's my opinion on things.
Love it. Well, where can people learn more about you online?
Yeah, a couple of different places. Ideally, my LinkedIn, that's where I'm going to post all sorts of tools, thoughts, advice for anyone that is just getting into fintech sales, especially founders. My LinkedIn, my name's a little boring. My parents may be a little boring. So I'm just Stacy. No E's or I's, just a CY. Bishop is the last name. Or you can hop out to my landing page, which is stacybishop.com.
Outstanding. We'll
Yeah.
make sure and link that in the show notes. Stacy, super valuable today. Thanks for being on SaaS Fuel.
Thank you so much for having me, Jeff. It was a pleasure. I appreciate it.
Thanks again, Stacy, for coming on the show and sharing your insights and resources. You can learn more about Stacy at stacybishop.com. As always, all links, highlights, resources, and full show notes are available at saasfuel.com. And be sure to check us out on YouTube as well. It's at Champion Leadership. We have full video episodes over there, shorts, outtakes, training, lots more over there for you on YouTube. Thought leaders share. Share this episode with someone who still sends you articles and book recommendations. I mean, sometimes do you still get those in the mail? Anybody send those in the mail? Yeah, I get them via email and text a lot now, but there's still one or two people that I will get something in the mail every once in a while, which is interesting. So hey, it's your turn to return that favor, and you can send it via email, text, or hey, you can always mail the podcast to them as well. Everyone who shares this week gets a magic deck, blessed by Gandalf himself, guaranteed to slay any pitch meeting with wizard grade storytelling. Don't hoard the wisdom, share it like you're casting a growth spell. What do floppy disks, Microsoft, and link routing for marketers have in common? Scott Kate, that's what. Next week, we sit down with the internet innovator himself to talk tech evolution, product intuition, and how 301.pro is changing the way marketers think about links. After that, we bring in Qasim Aslam, a serial entrepreneur and best-selling author who unpacks how world-class hiring and efficient delegation can unlock explosive, scalable growth. I'll see you next time, and as always, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/saasfuel. We'll be sure to read these out on future episodes.